The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. Actually, I won't be here tomorrow, but I'm usually here. And we're looking at a Dow that's down 71 at 17,796. The S&P is down 8 at 2,093. Comp index is down 32 at 5110. You've got gold, silver's down 10 cents. Crude oil is down in the 45.5 area. Bonds are down 21.30 seconds at 154.1. Ha ha. You see, this is very interesting. Finally, you've got bonds down with the market down. We'll talk about that as we move along. I just want to, purely by chance, I had done this yesterday as part of the Chapman Wave. This is, you've heard the promo where we're attempting here in the first part of the day to give you as much of the technicals as you can get, and for especially those of you who are possibly intraday trading or looking at different things. And I had shown this chart, and I said there's what I call the drop bucket in the Chapman Wave methodology. It's a double top formation that makes a kind of a cup formation, retests close to, at, or just above the previous high, and then fails. That was crude oil. Crude oil went to 48.36 at 220 yesterday. 220 on the 3rd, and then it came back, tried to rally, and then it failed yesterday at 20 to 9 Eastern time at 48.28. And then what happens in this particular technique, and what I had done is I had shown it as an example, and then I'd gone to the 10-minute E-mini. And I said the exact same pattern has occurred here. And there's what I call the drop bucket formation, double top formation. If there's a pullback, you should get, and I can't remember if I mentioned it or I typed it into the den, a one-to-one extension to the downside if you take out the low. Certainly in this cup formation, if you take out 1/3 to a half and start to close in that half area between the bottom of the cup and the lip, the left side top, that's usually a sign that you're going to retest the low. If you take out the low decisively, cannot bounce back and hold, there's a good chance you're going to make a one-to-one to the downside. Well, the one-to-one extension went to where? It went right down exactly. Look, there's the one-to-one from that high of 21.10.25. I used that plumb line right there. I'd shown it, and it took it right down to, there's the dashed line. Let me make it because of, I want this to be clear. Let's make it the maroon. Now you can see it went exactly to the low, one-to-one, tested the 2090.50 low. It went to 2090.50 exactly, in exactly the time frame. Look, from that midpoint that I'd chosen. And what's happened now is you've seen a pop-up that went to the 2100 level. And then you went down, and then overnight, from 8 o'clock last night, I think it was 8 o'clock, 10 o'clock last night. Yeah, 10 p.m. You started to move. They went A, B, C, D, E, F, even went to a G, pulls back, makes a cup formation, holds nicely above the 2090.50 level at 2092.25, screams up in an A, B, C, D this morning after I had sent out my E-mini chart, this one over here, that showed the different patterns. I sent this one out and said, we've made a D almost exactly in the time frame, and we should be making, this is where the resistance is. Wow, was there resistance? Went to 2104.75 and then plummeted. Must have been some news or something in a trough A, trough B. We've made a trough B, 2 single moves to the downside, and now we've made a low. The day's low so far is 2,084 round number. Try to rally. I've drawn an arch formation that says best case is to retest the breakout of 2090.50 and then make an arch, or it's going to fail here. This is not that good. I mean, this is a 10-minute chart, right? So now this is a very important moment because a close below 2084 suggests that you're going to go even lower, make another extension to the downside. A rally from here taking out 2089 says, yep, you can try to rally to the 2090-50 area, make another arch formation. All right, so that's that. Just thought I'd do a little technical analysis here. Couple of things I wanted to talk about. I'm going to go to the charts in a moment. Fickleness of the press. I always write about that. I wrote about it in the chapter that I had in the book called The Psychology of Investing. I had chapter 13, published by Wiley. And I talk about the press. I talk about politicians. I talk about the media in general. Politicians and the media are always the last to get it. The last to get it means what? The last to get it means that when, like Senator Warren here in Massachusetts and Markey, these two are just notorious for picking up. The train is moving along. Politicians sit in the caboose. When the train stops, they quickly see which way the wind is blowing, jump out of the cabin, get to the platform and say to everybody, the wind is blowing, and they point to whichever way it's blowing. Always behind the 8 ball. That's just the way it is in politics. So what is Warren going to do now? So Warren's going to be talking about giving seniors a certain amount of money, just kind of giving it to them in 2016. She's also talking about giving money to students to pay their loans. Well, I'm willing to bet that based on everything that we're looking at, that we're going to start seeing a real big slowdown in the cost of education over the next couple of years. It's going to be despite the fact that they would love to raise it even higher. I'm going to talk about that whole area subsequently. It's not important right now to talk about. Just wanted to point it out. Now, are these things good or bad? This is not the issue. The issue is making it a focus. Talking about focus, how fickle the press is. I always talk about this. I've been here for a lot of decades, and in all the decades, the only time I ever heard about a country on the northern side called Canada, well, we heard about it with the pipeline, etc., but it was really more peripheral. It wasn't even Canada. We were talking about politics here. It wasn't Canada at all. Only when Trudeau, former President Trudeau, had this wife who's the press thought was just gorgeous, and they just made the big fuss about the Trudeau and his wife. Then it was his former wife. So that was when you heard about Canada. When I was in Toronto a few weeks ago, just before the election, Monday was the election, I left on Sunday evening. What were they doing? What were they talking about? They were talking about the sexiness of Justin Trudeau. Boy, is that deep, huh? So, and what is Justin Trudeau talking about? He's talking about whatever you want, he'll give you. And that, there was really, I didn't get any real substance. If you could back it up with substance, I would have said, hey, there's something. So I didn't get all that much, but what I heard was really superficial. So now the press is back talking about Canada. They're really not talking about Canada, they're talking about Justin Trudeau. Now the next thing I want to talk about is Boston councillors. I've spoken about this, I don't know for how many, as long as I've been on TFNN, I've spoken about it. How politicians weasel and whittle and get through legislation that most people just can't do anything about. So what happens? They voted themselves, the councillors in Boston, for doing minimal work. Really, time-wise, it is minimal work. A pay raise. What is the pay raise? Well, Governor Baker didn't want to make it 100 grand, so he made it 99,500 or something like that. So nobody ever talks about, oh, this is a terrible thing. This is a terrible thing. In the quietness of the night, we're giving these politicians an extra from 78K to 99.5. That's not the issue. The issue is the concomitant, all the benefits that accrue, and especially when you know the way it works in unions and the way it works in politics, is to use the best 3 years. So these are guys that people that we're going to be paying a huge amount of money to in perpetuity. It goes on. Never thought I was going to get off on a rant here. Anyway, thought I'd get that out the way. And once again, it's just, I'm only talking about the politics of politics. I don't care which side you're on. This is the politics of politics. How things get done in the dead of night or behind your back or the sleight of hand. Wave the right hand and it's the left hand that's doing all the tricks. So Dow's down 65. We're going to talk about that in a moment. Let me just run a couple of things right now. I wanted to show you that the just one second here. The one thing I did not talk about was the volatility index. The VIX index right here. The VIX index is at 16.03. It's up 3.35%, up 52 cents. This is the first time that you've had the technicals improving a lot as the flatness of the VIX index was unfolding. And for my subscribers, I know, I give an incredible amount of work every single day. Z, Basil, you purged now. Hey, I'm just starting, Z, but I'm going to hold back because we've got a class to attend to right now. So what we're looking at is that arch formation in the 120-minute chart of the Dow and the cup formation in the VIX. And that is a pattern that we've looked at for years, how these two work in sequence like a mirror image. So this is a very important moment for a number of technical reasons. I started talking about it this morning in my Dow chart and in the overview section, that there are hints that we should be getting a lot of resistance and that we should start a pullback between now and tomorrow. So there we go. Okay, so now I wanted to do something else. I wanted to go straight to Dan in Massachusetts. Dan, how are you?
Good. How you doing?
You can tell I'm cooking. I'm fine.
Well, good. I thought I'd ask you about the BFR. I've called before, the Banco Francés. And had a huge jump up a couple days ago or last week.
Yes. I'm looking at this, and I just have a couple of questions to ask you before I do anything else. I want to just quickly say this is an E, and that is a peak F right there. I want you to quickly do this. You know, I was asked about this a while back. I don't remember who called. Banco Francés. Maybe it was you. But my question was, where is this Francés? Where this is
Argentina.
It's in Argentina, because I looked at that and I thought, okay, not speaking Portuguese or Spanish, I thought maybe Francés is a French, but Banco wouldn't have been French. So it's okay, got it.
Yeah, so kind of a confusing name.
It is a confusing name and certainly got me confused, but we know what it is. It's a bank, and that's the most important thing. Now, there are a couple of things that I'm looking at. I remember notating this quite a while back, and I think it was on its way to leg E. Well, E gave you a down move, but it didn't give a down arrow if it's purely technical based on the Chapman wave. And the reason was because the MACD, fast moving average, the 9-period differential, went right to the slow one and immediately reversed back up. So this is like the double top pattern that I was looking at just a moment ago in so many charts, and I'm going to go to it in a moment. So let me do this before I even ask you any questions. I do want to have a look at it in the weekly chart. So if I went there, A, B, C, C1, C2. Oh, you know what? We've got a break. I need the break because I really like the action of the chart, but I do see that we're getting really close to some kind of a double top. So I'll ask you the questions as soon. Dan, can you hold on?
Yep, that's fine.
Great. Folks, we're looking at BFR 22.80 up 44
If
cents.
you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Dan in Massachusetts, and we're looking at BFR, which is Banco Frances ADS. It's certainly not an American bank, but look what's done. It's actually one of the nicest looking bank stocks that I've seen in quite a while. 2474 was the high back in March, I believe. You have March, the week of the 20th. 2474 was the high. It comes all the way back down. This is a 50% decline. 1251, almost a 50% decline. 1251 was the low in August, and it runs all the way back in a very short period of time to the high of last week, which was 2467. This is 67, that's 7 cents below, and now it's pulled back a little bit. So now I'm going to ask you the question. What are you doing?
Well, I'm not in it right now. I was looking to get back in it because I've owned it in the past, but then I had that huge gap up, so I don't know if I'm too late to the party here or if it's worth trying because it's holding.
So I have to do two things. The very first thing is to say, because you are familiar with the action and you've been in the stock before,
right?
The surprise was the gap without you being able to get back in. And the question is, first of all, the thing that strikes you the most is you say to yourself, darn, I should have stayed in. But hey, yeah, I mean, that was a big pullback. So I congratulate you in getting out. The fact is that it must have been an earnings, a positive earnings or something that came about on the 26th of October. I could find out right now.
Right, I forget. It was something news related. I forget what it was.
Okay, well, what it was on the 24th Possibly smart identified, approximately 3 weeks. Oh, it doesn't say too much. 20. So there it is. Has returned 17.6% since October. All right. No, I'm not getting anything here. I would have seen some statement.
I found something the day it happened. I don't remember.
Okay, so that must have been a news-related item, but I'm not sure if it was actually an earnings, because it would have said earnings right there. So, okay, now we're looking at a stock that's gapped up. It's given back 50%, but it's holding very nicely on the 9-period moving average. I really like what's going on with this stock. Now, the fact that the market is down today, not a big deal, down 51 in the Dow, down 6 in the S&P, and this stock is up 44 cents, says whatever the news-related item was, it's holding very well. So this is what I'm thinking here. Because it is so close to breaking upside, and if it goes to the upside now, I have to consider that there is a possibility that the weekly chart is more likely in a B than in an E, and B is very positive, E is saying be careful. So I'm going to suggest you can either do it by a very small amount, or you can say to yourself, I'm going to just wait and see if the 21, it's a 22.85, if the 21.90 to what was the low on the 3rd, that was 3 days ago, on the 3rd the low was 21.48. That's a little bit too much. I would, two things. One is, I would nibble on it right here at 22.85, but I really do mean nibble. Whatever you're going to buy, you can only buy a very small part of it, and I'll tell you why. You want it like a little pilot light indicator, because over the next 3 days, it's going to tell you that if the general market rallies sharply now, this thing should, in fact, start another move up. And if there's a second move up that takes out 24.67, I have to consider that that's new leg C in the daily chart, suggesting it could still go to a D. So in that way, you're at least in the stock, getting a feel for the longer term. That's number one. And the other is, because it's a very small position, I would even say to you, and since you got out before the big decline, this time you can say, you know, I don't want to go through a decline like that. But if it takes out 21.48, doesn't even have to close under it. Just has to go to 21.47. This little small position that you have now will lose you 5.5%, 6%, but it's the tiniest position. Why? I'll tell you why. Because in the next week, if the general market starts to pull back sharply and the Dow takes out 17,000, let's call it 17,500, which should be a good support level. Okay. And the S, so that's 500, that's 3, so that's 30 points. And the S&P breaks 2060, 2058, closes up. And this stock is still holding steady. It hasn't broken that 21, whatever it is, 21.48 level. You could even give it the gap up low of 2021. I wouldn't want you in the stock at that point. I would still get out of this little tiny position with a 1.25 point stop. But I treat that the gap as really important, because if it refuses to completely fill the gap over the next 2 weeks or so, this is a stock that's saying, I'm one of the better stocks. So that's my recommendation for now. A little nibble right here. Where would I add to it? Probably I'd have to wait. And what's today? Today's Thursday. If you don't mind, let's call me again Tuesday or Wednesday of next week. Let's look at it together and tell me what you've done. But I like it. I think it's acting well. I just wouldn't get carried away at this level, almost at an all-time high. Thanks so much for calling, Dan. Thank you. Have a great weekend.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, Target Technicians are. Dow's down 43 at 17,824. S&P's down 5 at 2,097. And we're going to go straight to Singapore. Hi, William. How are you?
Oh, I'm fine. Thank you, Mr. Chairman. Thanks for picking up my call. Actually, I'm thinking of asking you, 2 questions. One is about the gold. It's come out from the high reached just recently at around, 1190. And I just wonder, would you think that this, so-called the up move, I think started from July this year, has it been negated?
Oh, the question is that you were looking at, what was it? I missed.
The gold. The
Dow?
gold futures. No, the gold futures.
Oh, the gold. Okay, I got it. Sorry, just the connection. Yeah. Okay. So this is what I'm looking at. You see, the gold has been in a pattern that is a pattern that says to me, and it's been saying that for, as you know, a long, long time. I've been looking at both the arch formation. I'm showing the gold chart now on the left, folks, is the daily. It made a D. I used what I call a phantom P, but it did go to a D. The GLD went to the D. In the Chapman wave, second D, the first one was at 1169.80. Back on the 824, let me see if has that 11. Oh, because it's a continuous contract. 1169.80 on the 24th of August. That was the market low. And now what we're looking at is a second high of peak D at 1191.70 on the 15th of October. Well, this move down has been very sharp. It's really just been two legs to the downside. And this is leg B to the downside. And it's already about to test the 1103.80 level of the 2nd of October. So the momentum to the downside is extremely strong. And one of the reasons is, it isn't the only, I don't think it's the only reason. I think it's part of the deflationary reason. And it was both the deflationary and the fact that the banks have been, there's a lot of stuff that's gone on in the banks that have made them much stronger than they were before. So sometimes when the banks are really looking bad, like in 2008, we're looking at gold being a safety haven. So that's out of it. Inflation is kind of out of it, at least for now. And if you look at the monthly chart, that thick black line that I've got, the 9-period exponential moving average, gold has only closed twice above it since it broke down back in December of 2012. That is just not good action. And it suggests to me that gold is going to, at some point, test them to it, get close to the 1,028 level, the 200-period moving average, somewhere around there. And in terms of time, it's extended a little bit. Let me just double check. Yeah, it's extended by about a month. What I thought would be the test, which would have been in the 980s. That was just based on the measurement. So it's held quite well, but it's not rallied. So rallying is more important than holding when you're talking about a monthly chart. You want to see something making higher highs and higher lows. So if I put that together, if you want, I'm going to put that together and show you the chart. This is the monthly chart of crude oil. And look at the crude oil. It is holding this very important trend line in the monthly chart. If I put it together with something that calls the Reuters Equal Weighted Commodity Index, TRCCI, you can see, I don't know what that big spike was over there. That's a little unusual. I must figure out, maybe let me just do this to see if it was a mistake. No, it's there. All right, well that, I don't know what made it go from 396 to 488. I think that's just a bad tick, but basically it's way underneath the 9-period moving average. So my overall assessment has to be, and now I'm going to show you something that I think, William, I don't have to tell you, you can see the relationship. Look at the dollar. You see the dollar, how well it's done? So it's not only the dollar that we're looking at, there are other factors involved, but it's a lot easier to use the dollar as a benchmark to say the steadiness, the way all the other indices in the monthly charts have been underneath the 9-period moving average, and this has been so beautifully above it, even the move, the three moves that it's had over the last 4 months underneath didn't close anywhere close to the 9-period moving average. I have to give the benefit of the doubt to the dollar, and I also have to put in here, let me show you something else. The Japanese yen, the dollar Japanese yen currency is also attempting, it's not as strong as the dollar, but it's attempting to hold the 9-period moving average in the monthly chart and the weekly chart. So, and the weekly chart is improving. It's not great, but you can see the daily has finally started to move away from all the resistance on the left. It needs to get to 122.80 to 123.20, and then it's going to show a lot of strength. So now, the specific question that you have is?
Whether, with this up move, recently it's going to be over, that we are going to head downwards all the way.
All right. So now if we look
at 1,000 or what?
Okay, so you're looking at gold, and the question is, where do I think that that gold will be going? And I'm also, if you don't mind, I'm going to include, because there's this counterpoint. Are you a musician at all? Have you ever played an instrument?
Yes, but that is a long time ago. I played the drums.
But you did play Bach, right?
No, not the Bach. It's drums.
Drums, but did you play Johann Sebastian Bach any piece? Oh, you played the drums. Oh, okay, that's different. Then you wouldn't have played. But if you had played Bach, then Bach has counterpoint, and when the melody on one hand is going up, sometimes the melody in the left hand is going in a counterpoint. So you get these tunes that are going in opposite directions. That's the same thing that you can often get when you're looking at the dollar and you're looking at gold. They go not always, but enough times that they go in opposite directions. And at this particular point, the dollar is very important. I've got very strong resistance for the dollar over the next 2 weeks, somewhere in the 98.80 to 99.10 area. But if it even gets there, I would have to say that there's a good chance that it's going to go to 100. 99.99 was the last high, and then 100.39. I have to do that because it isn't that gold goes exactly always, because sometimes what we've seen is that gold has held quite well, even though the dollar was moving up. But in this particular instance, if you're looking at the pattern that I've drawn in here in the weekly chart of gold, I drew this in a long time ago. I drew in the arch formation. And that's saying to me that there's a real good chance that the area of gold between 1,097 to 1,080, 1,072, I'm looking at the continuous contract. That's going to be really important, because if gold closes under the July low, it must close. It can't just go there and bounce. But if it closes under the July low, my thinking is that we're going to have an acceleration quite soon in the dollar, and we're going to have an up, that is up, and you're going to have an acceleration down in gold. And that would be the move, that would be the big move that starts me for the very first time to really get interested in the gold contract, because the gold stocks, some of them have held very well. You know that. Some of the gold stocks have held, but not gold. Bullion is not acting well. So I'm going to say to you, very important to hold the August low, the July low. But my target really is more in the 1,050 to 1,020 area. If it can get anywhere close to that, I am going to start looking at gold stocks. I think that at that point, I'm going to look at get subscribers interested in maybe some of the better acting gold stocks. Look at Royal Gold. This is a very important component of the gold indexes, because it's a royalty company and it's made a new low, and it's right now testing the 200-period moving average, and gold hasn't. I don't think gold has finished its move down. So I'm just going to say I would be very careful about buying gold at this particular time. Some of the gold stocks are acting a little better than the others. I would like to see this washout accelerate down and the dollar make another new high. That'll be leg C. And then when it consolidates, gold will have a pretty good move. But you know what? This is the funny thing about when you're looking at charts that are just going down, 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 down. Because when they rally, sometimes they have a really good rally, and all they do is rally back to where they were like 3 weeks ago. You know, the 3 weeks ago, gold, I don't have to tell you, but gold was trading at 11.83.
Yes.
And now it's at 11.05. So even if it makes a pretty good rally, I'm thinking the best case is like another arch formation. So I'd be patient. If you're a long gold, just put in a stop. I wouldn't, just be a little careful, that's all. And watch the dollar closely, because the dollar on a daily basis is in leg D. And that says that it could have a bit of a pullback here, but I see a lot of support in the dollar at 97, is it 98.03? The whole area of 97.20 to 96.50 should be very strong support. I hope that helps you, William.
I'm not in the gold, because I thought of monitoring and possibly go on long for gold if it's dropping a little bit further, because like what you mentioned is well supported by the money trend line, the uptrend line. That's what I'm looking. I'm hoping that it doesn't break, and if it doesn't break there, and I was thinking of going on long on gold.
Yeah,
so,
and the only thing that I would do is I wouldn't get carried away. I'd only have small positions, because you want the trend to change to higher highs and higher lows, not lower highs and lower lows. Here's the other thing. Copper has just turned around sharply to the downside. You can see that this commodity, the whole commodity index, the reason why it's going down is that we're in a deflationary period at this particular point, and there goes copper. And that copper chart is saying to me, whoa, be careful. This is like, it's an economic barometer. I've got to be watching it real closely. Hope that helps you, William.
Yes. Thank you very much for all that.
Thank you very much for calling. Always appreciate it. William in Singapore, and that's great to hear from him. So we were looking at that. We were looking at the crude oil, of course, in many of the in the sector are looking weak. Here's what's really important to me. Within the context of, did I just hear? No. Within the context of the market itself, the power of this move from 15,370 in the Dow to the high just the other day, just underneath 17,800, is so strong that it's going to take really bad economic news to take the Dow down to, let's just be as negative as we can right at this moment. And that says that the 9-period exponential moving of the average of the Dow is at 17,277, 600 points away, just under 600 points away. It's just going to be horrible news, and the market's going to have to take it in very negatively, and the VIX index has to really scream. It's only at 1567 right now. Now it's only up 1%. The VIX really has to get into the 19 to 21 area to see the kind of selling that's going to take the Dow down to the 17,300s. And it's going to be sustained there. So I don't know I'm not saying it can't be done. In fact, we have just taken a new short position today based on what was happening in the market. More protective thing. It's just, that's the way there are levels that I'm looking at. But basically, I'm still looking at a bifurcated market. We still have long positions. We still have short positions. Raise the stop on some of the longs. So I'd rather take a little profit or a break-even trade. But at the same time, how the short positions actually work is going to be very important. I'm going to show you something here that I think is going to be very important as well. If I look at AZO, which is AutoZone, so it's now in leg. Is this still leg C? Wow, still in leg C, in a new buy mode, all-time high. And I'm watching it real closely because if AutoZone gets to a point where it suddenly gets overbought to the extent that it turns around and it starts to trade underneath, it's at 796, up 7.92%. So that means, let's just say tomorrow's a weekday for AutoZone. It makes a peak C. Monday you come along and it pops up and it goes to a D. At that particular point with the stochastic at 92% and the MACD is still good and improving in the weekly chart, it's going to take something. It's going to take, I don't know when the next report comes out, but it's going to take some really bad news for it to tank. And this is in the auto, car, truck parts area. AAP is another one, starting to stall. So now what I'm doing for the very first time is I'm beginning to see a rotation through the different auto, truck, parts area. And that's saying to me that as long as the autos themselves, now Ford made a doji high and gap down at 1584, and now it's trading at 1453. So my thinking was that all the 17 million new car buying will impact the auto parts because people have been holding their cars for a long time, but over the last year and a half with practically, they call it free money. It's not free money, of course, but free interest rates in the auto for loans. There's just been an incredible amount of buying. And General Motors looks like it's making a little bit of a double top. We're along General Motors. FCAU, this is Fiat Chrysler, made a peak bean is faltering. I'll talk about that more when we get back. Basil Chapman, Tanker Technicians out. Now the Dow's only down 25, S&P down 3. We'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Services. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. Don't forget Daryl's show. Great show. So Dow's only down 15. S&P's down 2.5. I had a couple of quick questions. Let me get to that. So UUP, which is, well, first of all, here's the Dow chart. You remember when I said the E-mini 10-minute, it made a bottom. Now it needs to rally. It needs to get back to the 19.50 area. I drew the arch formation. Well, it turns out the arch formation should have been a little higher, like that. This is leg A up, and we'll see how it can sustain this move. But so that's a pattern to look at. Gives you 2090 now as support. 2096 would be the area to watch, because a close above that says, hey, you could even work your way a little higher than that. So, excuse me. FXE, which is the currency shares, Euro Trust, trading at 106.51, up 0.08. I've got the weekly chart. You see, this is the same pattern that we were looking at before. We were looking at gold. It looks the same. It's pulling back because the dollar's coming down. If you want to do your lightning bolt, A to B equals C to D, there it is. There's A to B, and we'll do this is the Chapman wave parallel count, and that says you've gone a little extra. So it's broken that. And now you've got the other pattern that I say is the extension, the 1-to-1, and that could take you down to retest the 102.92 area. Not looking very good now. All I can say is a close below 106 suggests that it's going to go test the very low range between 104 and 103. Okay, UUP, the UUP is the exact opposite. This is in leg D right now, and I like the action. It's acting very well. It's broken the downtrend resistance. So the whole thing that I said about the dollar applies here. Then GB wants to know, about Apple. So this is very interesting. I can't do it now. I'll do it next week sometime. I want to talk. Someone will remind me, maybe Tuesday. I went to the Apple store, talk about it, the small Apple store where the new one's being built, and I'll talk about what I'm seeing in Apple. But in the meantime, it's made a peak E on the daily at 121.08, down 92 cents. It's just stuck in a range. The monthly chart suggests that it's stuck between about 123 and 117. If it closes under 116, if it closes under 116, I'd say be careful because it's going towards the lower part of its range. It's a mature company. Treat it more as a dividend stock now. I don't see that much appreciation on the upside. I also see some pretty good support on the downside. So let me do this just in case I'm not able to make it tomorrow. I'm trying, but I don't think I can. In the meantime, so this is what I'm watching real closely. INDU, the Dow. We'll use the Dow for the moment. A close below 17,700 on the Dow says that 620 to 600 is going to be really important. Why? Because if it closes below that and all of next week we do not make a new recovery high above 17,799, 17,977. That was exactly the wrong way around. 17,977 makes the centennial, the millennium level at 18,000 really strong, going into so 17,950 to 18,000 becomes more and more a resistance point. It looks to me like we just need a breather right now, treating it as a breather. Okay? The VIX index is going to be the clue because it has to be bad news together with the VIX. It can't just be the VIX. It has to be the two together. And the VIX is just not able to hold or sustain a rally. It's at 1557. If the volatility index starts to trade above 17 between now and Monday at 2 o'clock, the market will start to pull back deeper. That's just the way I'm looking at it. And then you've got a cup formation, and that says, watch out, because anytime the VIX starts to trade in the upper teens and holds there, you're looking at a different ball game altogether. It's a ball game that says selling is predominating. Selling in the market is predominating. Buying of the VIX for insurance is the fund manager's modus operandi. So in a Fed-dependent market, Basil, dependent traders. Yeah, so just real quickly, the TLT, it's at 120. I'm a little afraid that maybe we're going to get a little bit more of a rally in the yields. We'll see what happens. So these are things to watch. Watch 119 in the TLT, and the TBT, watch 46. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,